Hello and welcome to the Market Capitalist. I am Domenico Johnston. Emerging markets. They're always the topic of conversation when it comes to investing because there's so much potential that many investors see in these markets around the world. Recently I've come across a couple articles, and one will actually be linked below, that indicate or that are of the opinion that emerging markets are going to see reduced returns in the years ahead because of some, primarily inflationary pressures that the markets will be experiencing in the near to not so distant future. While this might be right or it may be wrong, I think you should think of it as almost a good thing or an opportunity. It's not always bad that they say, oh, emerging markets, there's not much opportunity left there like there used to be because of inflationary pressures that are forecasted to pick up. Well, that's okay, but there's companies that address these issues in these emerging markets, and they'll stand to benefit from them. You have ag companies that are heavily invested in commodities, which will feel inflationary pressures if this comes true, and they stand to benefit from them. Also, energy companies. This is the two clearest areas that I see in terms of directly benefiting from inflationary pressures within these countries. So there's something, I think, as far as thinking critically about an article, when you hear negative, these are the actions that are going to happen, these are the consequences from those actions. Think about who stands to gain, because typically you don't have 100% losers. You have somebody that's positioned correctly to profit from the market. Even when even when the market crashed, somebody had a short position and somebody made one heck of a profit. Now, obviously, the majority of people that have the long position said, "Oh no, I lost whatever the amount was," but there's that smaller group that had the bet in place to say, if this goes down, I'm going to get a good return, and they did. Same sort of principle applies with emerging markets and these companies that are positioned well to benefit if prices, whether it be commodity, soybean, sugar, or whether it be oil or some other type of energy source. If energy is in more demand, there'll be companies positioned to benefit from that because they're already in the game of energy. It's not like they're showing up at the time when inflation's kicking up and saying, hey, I want to be an energy producer. No, they've been an energy producer and they'll continue to be. So keep that in mind. The article that I'm linking, if you go through and read that, the thoughts that I have should reflect your thoughts in terms of what you see as an opportunity there, based on this essentially negative or more pessimistic piece. But as you go through and read other articles, because you always come across somebody saying, oh, this sort of bad thing is going to be on the horizon. Well, think about who is positioned in terms of companies positioned well to benefit from that bad thing, and positioned well to serve the needs of those people that are affected by that bad thing as well. So keep that in mind. Thank you for tuning in again. Comments below, they're always welcome. Thank you.